Good morning, I'm Lauren Hayes for the Finance News Network. Stocks slumped Friday, capping off a volatile week of trading, a day after posting a historic turnaround rally. Early gains were erased following the Michigan Consumer Sentiment Report that showed an increase in one-year inflation expectations for the first time in 7 months and came after Thursday's hotter-than-expected CPI report. Both reports added scepticism to the peak inflation dynamic and supports recent Fedspeak that has continued to push a raise and hold narrative until inflation meaningfully comes down. And in the UK, just over a month after Truss took office, promising a new radical tax-cutting Conservative government, the UK PM now faces political ruin, her signature economic policy rejected by markets, voters and her own MPs. Her Chancellor, the first casualty after his debt-fuelled mini-budget, sent panic through markets. On Friday, the Dow Jones Industrial Average fell 1.3%. Still, the index was up 1.2% on the week. The S&P 500 shed 2.4% and notched its 7th negative close in 8 days. The Nasdaq slipped 3.1%, weighed down by losses in Tesla and Lucid Motors, which declined 7.6% and 8.6% respectively. At the same time, bond yields spiked, with the rate on the 10-year US Treasury topping 4% for the second time in 2 days, as investors reacted to higher inflation expectations. In company news, the reporting season kicked off with US banks. JP Morgan's shares rose 1.7% after the bank reported a less severe drop in third quarter income than analysts had expected. Shares in Citigroup and Wells Fargo also picked up on the back of their third quarter results, but Morgan Stanley dropped 4.8% as it suffered from a drop-off in investment banking fees. The largest US banks are benefiting from the Federal Reserve's campaign to increase interest rates, charging more for consumer loans and corporate lines of credit without offering customers significantly better rates on deposits. And the 91-year-old Rupert Murdoch is at it again, wanting to merge Fox with News Corp, a deal that would reunite the television group behind the Fox News cable channel with the owner of newspapers, including the Wall Street Journal. Across the sectors, there was very little safe haven status, with the fall in the oil price putting pressure on the energy sector once again. The best performing industry was travel and bank stocks, while EV charger, lithium and hydrogen stocks struggled. On the currency front, sterling weakness remains the big FX story, with UK companies now very attractive from a valuation perspective for US competitors. As one US private equity executive put it this week, everything in the UK is on sale. UK companies are a lot cheaper than a few weeks ago, and traders expect a pickup in UK M&A to be triggered by weakness in the pound. The same could happen in Australia, given the fall in the Australian dollar. One Australian dollar has weakened compared to the US dollar on Friday, buying 62.15 US cents. On the commodities front, iron ore futures are pointing to a 1.5% fall. Gold lost 1.7%, silver dropped 4.5%, copper lost 0.5%, and oil lost 3.9%. The SPI futures are pointing to a 1.5% fall. I'm Lauren Hayes. Have a great day.